Hello, my name is Troy White, Portfolio Manager at Hoodoo Financial. Just wanted to drop in and make a quick video to answer just one question. And the question is, excuse me, please like this video, please share this video, please subscribe to this YouTube channel. And, uh, and if you need any personal attention, you can reach out to me via email at twhite@hoodoofinancial.com, right? Yeah, .com. All right, question is, do I have the proper choices in my retirement or 401k plan? And is it enough to allow me to retire when I intend to? Now, as I read through the question again, this is a multifaceted question, actually. It covers multiple issues. I originally wanted to discuss it from the investment standpoint. Do I have the proper choices? So as a portfolio manager, I'm very much interested, and I get excited about the investment choices, selecting the right stocks, the right ETFs, etc. But the complete question it covers more aspects. Do I have the proper choices in my retirement or 401k plan? And is it enough to allow me to retire when I intend to? So it's at least three different subjects there. The proper choices, which I just mentioned, meaning the investments inside the account. So I'm going to address that. Second question is choices in my retirement or 401k plan. So right there, we need to identify what is the right and what type of retirement plans do you hold. You might not have a 401k. So what type of retirement plan do you have? What type of retirement account do you have? So you may, if you're a teacher if you're a teacher, you might have a 457. If you're a government worker, you may have a 403b. If you are an entrepreneur, that is self-employed individual, you may have a SEP IRA. If you just as a person doing what you do and you don't have a 401k plan, then you just need a traditional IRA. Or do you have a Roth IRA? Those are two very distinctively different types of accounts. And the types of investments that go inside each one of those accounts can be, and in some cases must be, should be different. And specifically, there are types of investments that you don't put in some of those types of accounts. And those types of accounts are dictated by you, by what type of person you are, meaning what you do for a living, mostly, and or what you don't do for a living. All right, I'm going to touch on that some more. And is it enough to allow me to retire when I intend to? Now, is it enough? That's a financial planning question. So that means you have to identify two things. When you intend to retire, you have to have identified that. And then, is it enough? How do you know what's enough? So those are fundamental questions that can only be answered through doing a financial plan. If you need a financial plan, I'll help you. I have the software, the tools, the knowledge, the experience to create, to develop a financial plan for you. All right, so let's start there, actually, because the rest of this is dictated by the financial plan. So a financial plan is going to starts off with your goals and dreams. So we have to identify what you want first off. And from identifying what you want, especially at retirement, but not just at retirement, from now until retirement. So the things that you want, we have to put them on a time horizon, which retirement is on that time horizon. There are many goals that you have, and every goal you have has a dollar figure attached to it. They won't be achieved without reaching a certain amount of dollars to achieve that we need to spend to achieve them. Even if it's just something simple. I want to go on a trip. I want to go on a cruise in 5 years. Well, you got to buy the ticket. You got to have the spending money. You got to have the the new clothes, the airfare, all that. There are things that you need to do to plan for that, and your finances is one of them. And so every goal that you have that's bigger than that exists on a time horizon, meaning it's going to occur in 5 years, then something else in 7 years, then another goal you have in 10 years, then another goal you have in 15, another goal in 20, and then 30, and so on and so forth. We need to identify all of those because we won't be able to achieve them, any one of them, without identifying all of them. Because if you only identified one of those goals and we're saving for it, then the plans will be ruined by some of those other goals we didn't identify that creep up and they require some of your money. And then, hey, we didn't account for that. So now the goal that we were saving for, we're going to come short. We're going to come up short and not achieve it because the money was used somewhere else. So that is why we have to determine, is it enough to allow for me to retire when I intend? So the financial planning will determine that for us. Now let's go backwards a little bit more. I touched on the types of retirement accounts. Now, you are more likely to have different types of retirement accounts and do different things with those retirement accounts. I will point throughout your work life. I want to point out something. You've had other accounts, but you have liquidated those accounts when you left that job. So nowadays, people use their retirement accounts as unemployment accounts. When you lose the job, you get unemployment, but you also liquidate your 401k and you use that to help you pay your bills until you find the next job. So you need a person like me who know that already, so that while you have your job, we should be preparing for the time when you don't have your job, so that you don't take from your 401k. You're going to take from your rainy day fund that we built up while you have your job. So that's about the retirement accounts. So at all times, we should have an IRA that you're saving into, regardless if you got a 401k or not. Then, if you're someone interested in alternative assets or just real estate investing, we might need to have a self-directed IRA at some point. Also, depending on the job, if you're a government worker, if you're a church worker, like a pastor, it's a different type of account, retirement account for you. If you're a teacher, it's a different type of retirement account for you. If you're self-employed, different type of retirement account. And each of those types of accounts allow you to put a different maximum amount inside those accounts. Now, remember the benefit of a retirement account. One, you get tax deferred growth, most of them. In the case of a Roth IRA, those are tax-free dollars. So at retirement, you pull out, there's no tax on those dollars. But the benefit of tax deferred growth is that it reduces your taxable income every year. So part of financial planning is tax planning. So we should be planning by the investments you make to reduce your taxes throughout the year so that you receive more back. And then we should be planning what we're going to do with that. And when I say what we're going to do, I mean like my most frequent goal that I try to impart, whatever the term is, pass on to my clients is that you should be starting a business, and we should be using your tax return and your tax planning and your tax the tax that we submit. You know, we should. I can also help prepare your taxes to file your taxes, but we should be doing that with an eye towards getting back monies that we will use for your business to get your business started. And so once we start your business, then we can take more deductions. We can go on and on and on about that, but that's a whole longer video. So, do I have the proper choices in my retirement account? So then that goes full circle. So based on the financial planning, we're going to understand your risk tolerance. What does that mean? That means how well can you tolerate risk? In a simplistic explanation is, if you had $1,000 and you put it on a stock and it went down to $400, what you gonna do about that? Are you gonna be crying? You gonna be sweating, or do you think that's a bad thing, or do you think that's a good thing? And or somewhere in between. How would you react to that? How would you feel about that? Do you feel that you lost your money? And then, not just that, but basically, these type of questions help us identify your ability to tolerate risk, how you feel about money. Because basically, if you understand that scared money don't make money, understand that it take money to make money, and understand that as an investor, you should be a life cycle investor. You should be not a life. You should invest for the long term, is what I'm saying. But beyond long term, you should invest for, what I'm trying to say is, a legacy based investor and not a life cycle phase investor. Life cycle phases mean the first part of your life, you accumulate your assets. The second part of your life, you protect what you have done. And then the third part, towards the end of your life, you are withdrawing from the investments that you have made. So the point there is to run out of money when you run out of life. But as a legacy investor, you are saving and investing for your kids and your kids' kids. So it don't stop is what that is. So you don't pull back, you keep going for the gusto the whole time. So part of understanding that is financial literacy. And financial literacy affects your risk tolerance. And your risk tolerance dictates what investments we're going to have in your account. Because if those investments are going to keep you awake at night, that's the wrong investment for you. And that tells me that you don't know. I don't mean to disparage you, but that means you don't know what you're doing. That means you don't know what you're talking about. You're just too scary. And you're not willing to, you are willing to just be moderately broke all the time. And you're not someone who's going for it, trying to be successful. Now, that's saying a lot about a person just by that, but it through my experience, that's what it means. That's what it means when the rubber hits the road. That's what it means. You mean you're scared, and you tentative, and you scared to spend your money. You scared to invest your money, and the only way to combat that is to learn more. And so by watching videos like this and coming to my workshops, coming to my seminars, come and sit down and talk and learn, and let's get started. Let's start your account. And so I will help you build a portfolio that matches your risk tolerance, that matches your financial plan. And the portfolio will be inside your retirement account and your traditional investment account that you have for goals that are outside of retirement. So I'm going to actually cut it there. So the question was, Do I have the proper choices in my retirement or 401k plan? And is it enough to allow me to retire when I intend to? Well, we need to determine when you intend to retire, how you intend to retire, what type of retirement accounts are going to get us to achieve that goal, and what type of investments we're going to put in those accounts. That's what that means. So reach out if you need help. I love to help you. You know, I'm looking for clients, so if you want to be one, let's do it. And remember, please like this video, share this video, subscribe to my YouTube channel, and you can contact me at twhite@hoodoofinancial.com. Holler.